The only real reason to own Bitcoin is speculation, chasing higher prices. It's higher today, trading above $58,000. Francisco Blanch is here. He's the head of BOA's Global Commodity and Derivatives Research. Joins us now. So the question is, people may own it for speculative purposes, but at what point does the train ride end, if you will, if that's the case, right?
Right. Well, look, I think at the end of the day, Andrew, this is about supply and demand. We know the supply of Bitcoin is capped at 21 million coins. The supply growth rate of Bitcoin is halving every 4 years. So there's less and less Bitcoin coming in. So ultimately, it's exactly what you said, is when does the demand for the cryptocurrency stop growing? And ultimately, that's a question of adoption. So if adoption starts to falter, I think prices are going to come down pretty quickly. But if it grows a lot more, then we have a different problem, which is the energy consumption of crypto, which is one thing our report highlights, is that prices, at the end of the day, drive energy demand, drive CO2 emissions. And the question is, do we really need to have such a polluting instrument at the time when we're trying to essentially go to net zero emissions in 30 years here?
Okay, but I think the question that we should be asking here is, let's say it's a speculative instrument. And by the way, I think it's almost impossible to say right now that it isn't. But if you believe that it is some form of digital gold, it sounds to me like your view is that the current folks who have money in Bitcoin won't actually hold it when it gets to some kind of steady state that feels a little bit more like gold, because you'll think to yourself, I don't have a 10x opportunity going on in the future, therefore then I sell, therefore it pushes the stock down. I'm asking you, at what price does that happen? Right.
Well, I mean, I think it's impossible to tell, but one thing I'd say about prices in Bitcoin is that, remember, in 2017, 2018, we had a big run-up in prices that was led largely by retail investors flowing in. This time around, there's been a lot more institutional investors coming through into the market. And we also know there's a lot of hedge funds in this trade. So I think if the hedge funds somehow smell that there is downside risk, they're all going to try to get out. And the other thing that we observed from Bitcoin in our report is that it's driven by liquidity to the upside. And that's something unusual. Most asset classes, Andrew, when there's more liquidity, prices stabilize. In the case of Bitcoin, there's more liquidity and prices go up. That's kind of a very, very peculiar
What do you think the downside risk is? At $58,000, since I'm struggling to get you to give me an upper end of this, what's your lower end of this?
Well, I mean, the reason I can't do that is because we don't really have price targets in our report. So we haven't really kind of come down to that. But one way to think about downside risk in Bitcoin is the actual cost to produce it. Remember, it takes a lot of electricity, it takes a lot of computer chips, and today we think the cost of production of that Bitcoin, the cost of mining it, so to speak, is right around $20,000 per coin. So that sets, in a way, some reference to the actual cost. There's no real intrinsic value, but that's one way to think about it.